credit crunch is a classic boom and bust. So people borrowed too much, spent too much, ran up very big debts, so did the banks, and all of a sudden it was realised with subprime housing loans as the biggest example that this wasn't sustainable, that the loans couldn't be repaid and that there wasn't enough interest being charged for the risks of the actual underlying loans. So at the moment everybody is scared to lend to anybody, including the banks are afraid to lend to each other because they aren't sure whether the institution they're lending to is actually solvent, because they all have a lot of what's called bad assets, which is basically loans that may be worthless or which are worth a lot less than they were when they were issued. Well, I would be one of those who thinks that the whole of 2009 is going to be pretty awful. The interesting question is, as you get to 2010 and people have been through a year, whether the fact is that most people will keep their jobs. Those who stay and work will be better off because their mortgages are cheaper, fuel prices are cheaper, a number of other things are cheaper because of the raw material costs falling. So if you stay and work and you start to feel secure in your job, then you'll feel better off. So, and if you get an impression as well that unemployment has stopped rising, that a bottom's been reached, but I don't know when that's going to happen, and it certainly hasn't happened yet. If prices fall and the retailers are still paying out the same or more for staff and for stuff that they're buying in, then their profits disappear and potentially they go bust. The thing that's in their favour is that raw material prices have come down. What's going against them is that a lot of them will import their goods. Pound's very weak, and so in pound terms, anything that they're buying in from abroad will be more expensive. So it depends how all those things play out and how quickly they can adjust. It's not clear how much money the banks need, and they're getting mixed messages. So far the government have recapitalised them. What they've done is given them some additional reserves so that they can absorb some more losses. The trouble is that everybody thinks that there's a lot more losses to come. Think about commercial property, think about small businesses starting to default. So if the banks don't know how much capital they're going to need to absorb unquantified losses, then they will be they will hoard capital whatever happens. In terms of what the government does, you could say, could the government start buying assets from the banks? Well, again, it's very difficult to price them. You don't know what the losses are going to be. Although prices have fallen, you don't know if they've fallen far enough. It's exactly the same as is happening in the housing market, where yes, house prices have come down, they're still falling, but nobody knows how low they're going to go. The idea of trying to cap the losses does help to tackle the problem I've just described, which is people are unsure how much capital the bank will need. So if the government says, well, once your losses go beyond a certain point, we'll ensure that should help. In terms of throwing good money after bad, that's quite possible. So for example, if the government starts to buy these packages of subprime mortgages, and it buys them at today's prices, who knows, they could be worth less, and then we, the taxpayer, will have taken the loss instead of the bank taking the loss. So there's a danger of what's called moral hazard, that the banks won't be punished for all of the bad lending that they made, and the government just bails them out. So that's a good point. Well, a weak pound is good for exporters, but this takes a while to take effect. And of course, the countries that you're trying to export to at the moment, almost every country is either in recession or its economy is slowing down so quickly that they're not the ideal customer. But potentially it means that exports should pick up.